morning, traders. This is Tim Kelly at Forex TV, January 16th. It's Wednesday, 7 a.m. New York time, Eastern time. Coming to you with a ProSticks Ichimoku report. Got a special situation here with dollar yen. I've drawn out the 4-hour chart here. What we see here is a possibility of a further correction. After the comments by the Minister of the Economy in Japan 2 nights ago, that in his opinion, the yen had weakened too fast and too far, and was causing problems in the economy, specifically in the import arena. The energy costs were rising due to a weaker yen a lot faster than they had been comfortable with. So what you saw was a correction in this incredible run-up that we've had, and that was somewhat thought that we would anticipate that, running from that 81 figure up to just below 90. And so what we've got here is we've got a little bit of a situation where, well, it's more than a little bit of a situation. We have broken a trend here in this up channel. You see that up channel from early December. Actually, this is December 21st, but the up channel was in place from the beginning of December, where we went from that 82 level, actually below that, about the 82 level, and then rose up to, get the crosshairs in here, that 89.70, 89.80 area where the advance was capped. So what is significant about this is first that the uptrend since mid-December has been broken to the downside. Also, and I'm going to blow this up because we can see it a little more clearly, is that earlier in the European session, we broke for the first time below the Ichimoku 4-hour cloud. So that gives way to a further correction in this pair, perhaps starting into the 86.40, or perhaps even testing levels that we haven't seen in quite some time, that old support and resistance level down around the 84 level. I'm thinking a little bit more in terms of right in this level here, and I'm going to have to shrink this a little bit so we can see, and retesting right down to this level where we had our resistance. Let me draw that in so we could see it a little bit better. Okay, so this 84 level actually up here, and that's about 84.50. So there is vulnerability down there now that we've broken this up channel. You see this red line here is at 84.50. Certainly up here is the other former major resistance level, and those are levels that could be tested. So dollar yen certainly vulnerable to the downside, and we've seen in the past 48 hours since that announcement by the Japanese government officials that the rallies in dollar yen have been sold pretty aggressively, and can't quite get to levels that we've seen recently. So this rally has certainly had the steam taken out of it. It's not that we couldn't get back above there, but there is vulnerability for further correction here. When you look at the 15-minute, you see that it's been pretty much that 89.11 level was really the that's when we had that announcement, and it just can't seem to break through the Ichimoku cloud. You see we came through sideways here, quickly sold off, testing it again here, but rejected once again in the 15-minute Ichimoku. Right now, you see a lot of rallies being sold, and that speaks to further yen weakness. So, looking at a bias to the downside now in this uptrend, so, pretty much in the vein of a correction here. So be aware of that. Japanese yen is not sustaining those rallies to the upside as it was in the past month. I think we have a bit of a change here, and that points to a further correction. Fundamentals in Japan certainly suggest, and certainly with the BOJ meeting next week, there could be further upside, but look for this pair or be aware that this pair could test lower by about 200 basis points. That's going to do it for dollar yen today. Thanks for joining us.